Bitcoin halving, a historic roller coaster for prices and stocks. Hello everyone and welcome to BitsPuls. I am your host Andrew, and today we are going to be talking about the impact of the recent Bitcoin halving on the price of Bitcoin and related stocks. As you know, the Bitcoin network completed its fourth halving on Friday evening, and the price of Bitcoin has only risen slightly since then. This is despite the fact that rewards for miners adding a new block to the blockchain were slashed in half, from 6025 to 3.125. Historically, halvings have led to price surges, but Bitcoin hasn't yet gained 4% since the event, trading around $66,500 as of early Tuesday afternoon. There are various reasons for Bitcoin's price remaining fairly steady so far, and hodlers may have to play the waiting game to reap the rewards. One reason is that the halving had no immediate impact on price. The market impact of Friday night's movement from the fourth to the fifth epoch will be felt over the ensuing weeks and months. Another reason is that investors who bought the rumor may be selling the news, which is pushing prices down. This is why Bitcoin dropped 12% in the 2 weeks before the halving. The halving affects price due to media attention, historical precedents incentivizing traders, and supply scarcity. But the impact of these factors on markets can be slow. Media attention draws retail users that are slower to react than professional traders, who conversely are more likely to be buying the rumor, selling the news, in anticipation of a price spike, which limits the immediate upside. Historically, the best day to sell Bitcoin has been 500 days after a halving. Meanwhile, Bitcoin-related stocks have seen some dramatic gains. MicroStrategy, the largest corporate holder of Bitcoin, was trading near $1,350 million SID Tuesday, roughly a 15% bump since Friday. Shares of top U.S. exchange Coinbase were up about 10% to $235. Meanwhile, shares of Bitcoin miners have also gained, with Marathon Digital Holdings up 15% to $9.28 and Riot Platforms up 25% to $11.70. The subsequent price increase of the major miners suggests market confidence that they will continue to provide sufficient hash rate to ensure the functionality of the blockchain, despite the reduced rewards, by deploying more efficient hardware to maintain profitability. However, in the first 48 hours following the halving, the network's hash rate dropped by around 5%, as miners either went offline or dialed down operations to avoid losing money. As larger miners bought more efficient machines this year, Thomas Chippis, CEO of Argo Blockchain, anticipates that the total hash rate will increase when those computers arrive from manufacturers and are plugged into the network. So, what does this all mean for investors? It's still too early to say what the long-term impact of the halving will be on the price of Bitcoin. However, the fact that Bitcoin-related stocks are rallying is a sign that investors are still bullish on the long-term prospects of Bitcoin. If you are considering investing in Bitcoin, it's important to remember that it is a volatile asset, and you should only invest what you can afford to lose. That's all for today's show. Thanks for watching, and see you next time. Don't forget to subscribe to the channel and give this video a like. It really helps us out. Also, don't forget to check out our website for more information on all things crypto. Until next time, stay informed and stay ahead of the curve.